Hi everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chen, a chartered professional accountant located in Oakville, Ontario, Canada, a town that's like 20 minutes west of Toronto. A lot of clients and a lot of investors out there are asking me this question, or is it true that you own a side hustle business that you generate business on and you get to write off a lot more stuff? Is that true? Well, the reality is, as a general rule of thumb, if you are earning business income or you're earning property income, which is from property income means that it is income from your property, you're eligible to deduct all reasonable expenses that you incur for the purpose of earning that particular stream of income, subject to a bunch of exceptions. Things that you would normally incur that you don't get to deduct would be something, for example, your automobile expenses. And if you want to find out how to deduct your automobile expenses, you can watch the video there. The other type of common expenses that you don't normally get to deduct when you're working as an employee, but you would have incurred that expenses anyway, would be something called home office expense. And today, we are trying to get in depth in terms of explaining what are the criteria to qualify you to claim home office expense. But before I get started, make sure that you hit the thumbs up if you like our video, and if you haven't subscribed to our YouTube channel yet, make sure you also hit that subscribe button. Now with that, let's get started. If you're a small business owner or you're a self-employed individual that you report your business income on your personal tax return, this is for you. And to qualify to claim home office expense, you have to meet either of these criteria. The first one is that your home serves as your principal place of business, or your business need to meet this criteria. You use it exclusively to earn business income, and you use it as a regular and continuous basis for meeting clients, which I'm going to go into depth explaining both of these criteria to you. But keep in mind, all you need to do is you only need to meet one of these criteria to qualify you to claim the home office expense. Now with that, let's start with what's considered the principal place of business. What's considered principal place of business? If you're someone that work at multiple locations for your business, then you may have multiple places that you work at, and with that, you can only deduct your home office as an expense if your home office is used as principal place of your business. Now, what does that really mean? Let's use an example, and this example is actually on the CRA's website. Let's say you're a contractor. Mr. A here is a building contractor, and he operates from his home office. With his type of business, he has to visit client sites multiple times, and sometimes he also has to visit the architect sites. To get city permit, he has to visit the city office all the time, and therefore he doesn't have a really fixed place of operating his business other than his own home, and therefore his home office is considered the principal place of business, even though he worked at multiple locations. Now, so that's one example to explain how this definition of principal place of business means. So the space that Mr. A in our example used in his own home, let's say a room in his home that he dedicated for the purpose of running his business, does not have to be exclusively used for the purpose for running his own business. It could also be shared use. He could use the same room to entertain his friends and families when they come over. But the key here is that only the business portion would be tax deductible. Let's go through the second example as per CRA's website. Now, Ms. B is a lawyer, and she has a dedicated rented space in a commercial office exclusively used to meet clients. And she also has this dedicated office at home. As you know, a lot of us are now working from home. She has this dedicated office space at her own place to also run her law practice. Because she spent most of her time meeting clients in her office, and she used her rented space, commercial office space for the purpose of running her practice, she's not eligible, and her home office is not the primary place, not the main place to run her business, and therefore she would not be qualified to claim home office expense as a deduction. Okay, now let's move on to the third example, which is not available on the CRA website at all. Let's use a lot of our clients are realtors. Let's use realtor as an example. A lot of our realtor clients who operate from their home office, they do pay a desk fee to their real estate brokerage to maintain a desk for them, but they don't really actually get a desk at the real estate brokerage. They only pay that as a fee, kind of similar to a subscription fee to belong to the brokerage, but they don't really get a desk. So primarily, the realtors would operate from their home, and they would manage their entire business, run their marketing, conduct Zoom meeting, and run their marketing effort as well as administrative duty, all from their home office. And in that case, the home office is considered the primary place of business, and therefore the realtor would still be eligible to claim the home office expense. Now, on the other hand, some realtors actually physically have an office located in their brokerage. In that case, if the realtor is not using their home as the principal place to run their business, and they are using the brokerage office as their principal place of running their business, including running the admin duty, HR duty, and everything, then that particular situation, the realtor would not be able to claim the home office expense deduction. Okay, the other way that you would be able to qualify to claim home office expense is if you use your home office exclusively, and it's important to underline exclusively, to earn business income, and it's important to you that you meet both criteria, and you use it on a regular and continuous basis to meet clients. What it really means is if you have a space or if you have a room dedicated in your home just for the purpose of meeting clients, and it's exclusively being used for the purpose of meeting clients, then you possibly could qualify to claim your home office expense deduction under this particular condition. You use the room not just for running your business, but you also use that particular room to entertain your family and friends, then chances are, because it's not being exclusively used for the purpose of running your business, and therefore you would not be able to meet this particular criteria, and therefore you would not be able to get the home office expense deduction. Now, another thing worthwhile mentioning is that if you use the room or the dedicated space exclusively to earn business income, and you use it on a regular and continuous basis for meeting client, you have to satisfy both criteria. That means you have to use also that particular dedicated space for the purpose of meeting clients. And the definition of meeting clients, according to CRA, unfortunately means that you are meeting clients in person. And it does not include meeting people or clients over Zoom, over any online meeting. Well, I hope that they would update their description and update their definition soon, given the rise of using online meeting these days. But according to the old definition and still on their website, meeting clients means meeting clients consistently in your home physically. So over Zoom, virtually would not count. Now, the funny part is, the two criteria that we just mentioned, principal place of operating your business, or you use exclusively your home office to run your business, as well as to meet your clients on a continuous basis, these two criteria only apply if you are operating a business. But if you're earning rental income, just like many real estate investors that we have, you actually do not need to meet these two criteria. All you need to do is to make sure that you are really operating your home. There is a dedicated space to run your business, and you deduct a reasonable amount of home office expense. Now, speaking of the type of home office expense, deducting home office expense, let's dive deeper into the type of home office expenses that you would be eligible to deduct. What you would be eligible to deduct is really the house expense. So you would be eligible to deduct mortgage interest. If you own your own home, you would pay utilities. You would be eligible to deduct your utilities, minor repairs that you conduct in the common area that would also benefit the dedicated space, property taxes, as well as insurance. And if you rent your place, you would also be eligible to deduct rent. Now, the actual amount that you would be qualified to deduct would not be the entire mortgage interest. It would not be the entire utilities expense. It would be dependent on the amount of the space available for the purpose of running the business. So let's use an example. If you own this townhouse that you own and you are running your business and you meet the criteria and you have a dedicated room and the size of the room is about 100 square feet and your whole house is about 1,000 square feet. So you essentially prorate all the expenses that I mentioned here. So 100 divided by 1,000, which is the full area, floor space. So that means it's 10% of mortgage interest, 10% of utilities, 10% of minor repairs, 10% of property tax, and 10% of insurance. You would be able to deduct 10% of everything related to your house, which is pretty awesome because you would have to pay for it anyway with or without your business. By having these expenses, you would be able to use these expenses to lower your tax payable. One of the most common questions that I get is, hey, like what's minor repairs? You know, I'm doing all these renovation to improve my property. Can I deduct it via home office expense? Well, the reality is minor repairs means that it's current expense. It has to be small in general. And if you are renovating your office, dedicated office space for the purpose of running your business, then that dedicated renovating cost, if it is not capital in nature, if it is just a current expense, maybe a little bit paint here or there, maybe it is just replacing the light bulb, those would be 100% deductible, provided that you would be able to show to CRA that those expenses are only incurred for the purpose in your particular room that you use dedicated for the purpose of running your business. Now, there could be some repairs that you do that are affecting the whole house. For example, roof repair, you repair some roof and it could affect your office, but only a small percentage. Then for those type of repairs, you would have to do the same amount of proration that we just did. The 10% that we used in our earlier example would be tax deductible against your income. Now, there's also a restrictions that people don't normally talk about. You can deduct home office expense to the extent that you are reporting income. Earlier this year, someone on my YouTube channel commented and said, hey Cherry, I'm a content creator. Can I deduct all these expenses? Well, the reality is, it sounds great that you're a content creator, but are you actually a content creator that you are generating profit from and you are serious about this business? You need to be able to generate business income in order for you to deduct that expense. You are not allowed to use home office expense to create a loss and offset against your other stream of income. For example, if you incur $2,000 of expenses, home office expenses, after all the proration and everything, you incur $2,000, but your net profit is only $1,000 from your business before deducting your home office expense. The maximum you would be able to deduct is $1,000. Now, the non-deductible portion, you would be able to carry forward to future years for you to deduct against your future earnings, but not in the current year. And there is a condition that provided that you are using the same office space consistently, same as the prior year, in order for you to deduct any carry forward amount. Now, the last thing that I get questions all the time is, would claiming home office expense ever affect my primary residence exemption? Well, this is a great question. In Canada, the biggest tax-free asset that you can get is the capital gain that you don't have to pay tax on, earned on selling your primary residence, provided that you actually meet all the qualification criteria to call that particular property as your primary residence. Now, question that come up is that, hey, like if I deduct 10% of my house expenses, would that affect my claim on primary residence exemption? So it all goes back to your particular situation. CRA, the Income Tax Act, would have a deemed disposition on the portion of the house. In our earlier example, it would be 10% of the house. Would force a deemed disposition of that 10% of the house at fair market value if you're changing the use of the property from primary residence, personal use, to using it for business purpose. However, CRA also mentioned that it is not their custom practice. It's their practice that they would not treat the situation and force a capital gain on you if the business use is ancillary to your primary residence use. So it's very minimal compared to using your house as your primary residence. It's also, you haven't done any structural change just for the purpose of converting the place into your office for business use. And you haven't taken any capital cost allowance claim. So those are the 3 criteria. And plus, there are a bunch of variation to it as well. If you're also renting out your basement, then it may also affect the primary residence use of your property. So these all come into play. And so to answer that particular question, generally speaking, if you claim 5%, 10%, it would not affect your primary residence exemption. But if you are also renting your basement and you're doing a bunch of other stuff, there may be a chance that you would get dinged on primary residence exemption. You may have to pay capital gain on that portion of the house on sale of the property. Everyone's situation is different. That's why if you want to know more, make sure that you contact our office for a proper consultation. Now, if you like this video and find it useful, make sure you give us a thumbs up and hit the subscribe button below. And if you have any questions, feel free to leave it in the comment section below, and I will try my best to get back to you. Until next time.